IT firm Tech Mahindra also declared earnings just a short while ago. Profit up 37%. Priya spoke to the management. Let's listen in.
Margins have been impacted because of the cross-currency headwinds. So what sort of trajectory do you see ahead in terms of margins, and what sense are you getting from the current market scenario?
So in this quarter, the sterling as a currency weakened, and that's where you've seen a 100 basis point impact on our margins. I think what currency is going to do in the next year is difficult to predict. It's going to be volatile. We know there are underlying issues as far as India is concerned in terms of the fiscal deficit and the current account deficit. So the currency is dependent on flows, capital flows, and those capital flows are not steady, and therefore there will be times when we will see a weaker currency, in my view. So that's where we are as far as currency and margins are concerned.
Any hedging measures that you've taken to combat this sort of cross-currency headwind?
We always hedge on currency. In fact, we are one of the few companies which has consistently hedged up to a 5-year horizon, and at the moment our hedge portfolio is almost 250 million pounds at a rate of 90, and about $680 million at over 56 rupees. So, but all that hedging can do is, in the short term, it mitigates volatility, but in the end, the underlying movement on currency will get reflected on business performance.
Right. So what is your outlook on spending by your top two clients, BT and AT&T? Because BT's business has constantly been declining for Tech Mahindra.
We don't measure our business as only top two clients. I mean, let's be very clear that today we have 150 clients, and we have a fair number of high growth clients within our portfolio. And we also have a fairly distributed geographical coverage now, because we have clients in about 6 countries in Africa. We have about 11 countries covered in Middle East. We have covered a fair amount right from New Zealand to Asia, all over. So my personal belief is that yes, some accounts will grow, some accounts will right size, some accounts will degrow. But overall, as a portfolio, we are very, very confident that our services are an integral part of their businesses. Their businesses are built around 2 paradigms. Number one is that they need to grow their business. For growing their business, they need technology partners like us, which can provide new service offerings like an M2M or a mobility solutions, whether it is an M Health or an M. That means my end customer should be able to see a portfolio of services. That means not only the telco that I'm serving, but the telco's customers. The second area where we add value is in helping them improve their operating matrix. And in that operating matrix, we work on IT services, we work at customer services, we work at marketing, we work at retail automation, and we also work on network services. So my portfolio is very diversified, and overall I continue to believe that my strength is an experience in this one vertical and being the largest player out of India in this particular segment.
Right, but what sort of decline do you anticipate from business from BT?
I don't go into that one account details. I promise you that we do some modeling. We sell analytical solutions, and trust me, we use some analytical solutions internally. All I want to share with you is that we are very realistic in our business planning, and we do take into account that there will be certain clients which will grow and certain clients which will not grow so much.
So does this mean that you are expecting non-BT business to drive growth for Tech Mahindra in the coming years?
I think, as I said, I don't want to get very specific, because my endeavor is that I should add value to my client's business. I should be able to drive value because I am a partner to my clients, and I like to be that partner for all 150 accounts, all 150 clients. And as I said, yes, because you're comparing one BT versus 149, the statistics tells you that 149 have a better chances of growing.
Also, so talking about acquisitions, are you looking at acquisitions as a way to drive growth? Because we've seen your last two acquisitions contributing quite a bit to your revenues.
It is an integral part of our strategy. It is our clear-cut strategy that as we diversify our service offerings, as we diversify our competencies, as we diversify our markets, we will look for acquisitions which plug into either new markets or into new competency or new service offering.
So talking about the telecom sector, the sector has been burdened by a lot of regulatory hurdles. So do you see that as a factor that could impact business for you in the coming quarters?
That businesses do get impacted either by availability of the spectrum or by sometimes regulatory compliances, and it is not only telecom. The reality is healthcare has its own challenges, financial services has its own challenges, and compliance, risk management, we do it for ourselves and we do it for our client organizations. So my personal belief is that consumption of telecom services is on a exponential rise. That the reality is that the devices that we carry today are only a lot more sophisticated than a full power of a PC 2 years ago. And it only tells you is that if you are going to be a big user of whether it is a social media or whether it is an enterprise application or whether it is a app store, ultimately it is only defining is that we are consuming telecom services more. If you're going to consume more, the service provider has to give you more bandwidth.
Right, so you're positive on the sector.
Right. I am.
All right. Talking about the geographical contribution of revenues, we've seen that your IT peers have been seeing an exponential increase from Europe, that is business from Europe, while you've seen a minor decline from Europe. So do you see Europe as a strong, potentially strong geography, or are you seeing some other emerging geographies as potential revenue contributors?
I mean, Europe, yes, we have had a decline because one of our big clients has had a decline in their business, overall IT spend, and that has impacted my overall Europe revenue mix. But in general, I would say is that I continue to be upbeat on Europe because I strongly believe that Europe is going to optimize and focus on operating matrix and alternate areas of growth a lot harder and faster than any other geography, because it is a natural reaction of an organization that if there is a squeeze somewhere, they need to fight back.
Right. My last question is on the US immigration bill. There has been a lot of talk. So if this bill were to get cleared, what sort of impact would it have on Tech Mahindra? And if you could elaborate on a cost impact basis, what would it be?
Well, I think it's difficult to put a precise cost to it at the moment because what shape this bill will take finally we have to see, but the kind of things that are being talked about will certainly impact cost significantly. Okay, and if you look at what analysts have said, their estimate is ranged between 100 to 300 basis points. How specifically it will impact us, we will have to see and assess if the bill is passed and once it is passed.
But have you already started taking steps, by increasing your sort of on-site hiring or, reducing the number of people that you're sending overseas?
As a business, the number of people we have onshore has been increasing if you look at the last few years, but that has also been driven by the type of business that we have won and the way delivery needs to be executed for this. If the bill in its current shape goes through, it is going to drive a much more significant onshore component. So we will have to wait and watch how that develops.
Any sort of percentage impact that you could give, in terms of costs for Tech Mahindra?
So as I told you, analyst estimates for the industry range between 100 to 300 basis points depending on the shape that it takes.
Let's take a quick break.